What's up, everybody? Welcome back to the Kansas City Commercial Real Estate Market Pulse. I'm your host, Logan Freeman, and today's guest is helping shape the future of commercial real estate by bringing together AI, digital infrastructure, and innovative technology to make the industry more transparent and efficient, which is right in line in why we host this show and this podcast for one simple reason, and that is that clarity beats noise. Every single day, there's no shortage of headlines or opinions or predictions about commercial real estate. And what I believe is missing is grounded, market specific insights from people actually doing the work, listing the properties, leasing the properties, underwriting those deals, and closing them across the United States. And so we exist here, the Market Pulse exists to cut through national narratives, explain what actually is happening on the ground, and help owners and investors and operators make better decisions with real data and real context. If you're coming into the show live, make sure to drop any questions or comments into the chat on LinkedIn. We are monitoring that. We'll get to those questions as they come up. Josh Morales is saying insightful topics are lined up. Absolutely. Absolutely, Josh. Thank you for being here and checking out the show. I'm excited to say we're continuing to grow here in Kansas City, and we've added a new team member, Parker Williams. We'll be working on a very niche asset class, which is industrial outdoor storage. And one trend that I'm starting to see is electrified industrial outdoor storage. So if your site has power, you have the optionality to open up that use case for many new businesses looking for that power. So reach out to Parker or anybody here on the team. We are 10 strong now, and we can handle your commercial real estate. If you want to check out the projects that we got accomplished in the first half of this year, we put out a nice market momentum website insight as well as a post, so you can find that on our website. Now, to our guest, Matthew Schneider. He's the president and CEO of Building Inc. He's a recognized leader at the intersection of commercial real estate and technology. And his work focuses on the digital infrastructure, AI, tokenization, and private markets, all with the goal of creating greater transparency and efficiency across commercial real estate finance. In addition to leading Building, Matthew serves on the board of directors at Fibri, a global PropTech organization. He advises several innovative startups and regularly speaks around the world on the future of commercial real estate technology. So Matthew, welcome to the Kansas City Commercial Real Estate Market Pulse.
Logan, thank you so much for having me. I'm excited to be here.
Yeah, we are excited to have you. We've had very great guests on previously talking about just data centers specifically, but less about the actually technology around commercial real estate. If anybody listens to me speak on a regular basis, I believe this is the future of commercial real estate, which is intersection of infrastructure, of technology, and of real estate. And we've just seen this play out in so many different ways. So the first question that we have for you today is artificial intelligence has obviously become one of the biggest buzzwords in commercial real estate in the world, right? Where are you seeing artificial intelligence actually create real value today? And where do you think the industry is getting ahead of itself?
That's a great question, because I think that the industry is getting ahead of itself when it comes to artificial intelligence. And oftentimes I have to ground people in reality and say that this is not a silver bullet tool. It has, at least right now, very particular applications. You have to use it correctly. And especially in a regulated environment like real estate, you have to be careful about what outputs it's creating so that it doesn't become detrimental for your firm and doesn't have some sort of widespread catastrophic effect on the real estate market. Because quite frankly, if we all just start deploying tools left and right, data, numbers are going out there and people start using that, it's going to spoil the data. And next thing we know, we're going to have another economic crisis in real estate. So the place that I always start when it comes to data and artificial intelligence is structuring that data.
Okay.
Artificial intelligence is really good at interpreting unstructured data, things like pictures or PDFs, Word documents, and contracts. These are full of words. They're full of data artifacts that are spread about, pages of information. it wouldn't be immediately machine readable like a spreadsheet would be. And so we have to deploy something like artificial intelligence to process these huge batches of unstructured data that really
Mm,
produces every single day. And it's been trained so efficiently at doing that, at interpreting pictures, reading long operating agreements or
yes.
leases or contracts, and being able to pull out the important information and then put that in a grid format where it might say, here's the names of the people involved, the dates, and the dollar signs. And that's immediately machine readable. It could be repurposed in workflows or in models. Simple as that. So, number one, taking unstructured data and structuring that, making that more workable, more usable for software platforms, or other people or future AI tools. Next, I would say indexing data. So once that's been structured, let's say that we've created a database that has thousands of documents and different types of files. We want to structure that so that we understand, here's all the rows and columns, put that into a neat spreadsheet. Artificial intelligence is really good at indexing that then. A good example is like a search bar, or when you query into ChatGPT and you say, have we discussed this topic? Can you see anywhere in these documents if it says this particular thing? That's indexing. You're looking for something very niche in particular. And to be able to do that across many, many documents pertaining to an asset or an entire portfolio, and then have a response given to you rapidly is super useful. It's a little bit more complex than just a search bar, because sometimes you have to dig into those documents, which again are unstructured, versus if a file was literally named lease agreement, not everything is. So sometimes you have to use AI to read the document, determine it's a lease, and then produce the answer that you're looking for. On top of that, we have anomaly detection. Artificial intelligence is getting really great at that. So looking for things that are out of place. This is also sort of a machine learning capability where you have trends, you have data sets, you're looking to make sure that everything is orderly. If there's an outlier there, if there's an anomaly, if something stands out, artificial intelligence is really good at picking up on that. And in real estate, that is really a risk mitigation measure. If something is out of place, if information could construe a deal or lead someone down the wrong path, you'd want to catch that beforehand and say, go to your tool, look for something that's out of line and say, how do we identify that, mitigate that? How do we fix that so that this doesn't go to a lender and they say, wow, this is a sore thumb in the deal. We're going to have to think twice about this, or an investor, or if you're in the middle of negotiations, you want to catch those things that are out of place before they arrive to the counterparty.
Mm,
Then the agentic side of artificial intelligence. So traditionally, you would have to hire people who are working around the clock to look at what's going on in properties and portfolios. And you hope that they're combing over everything. Well, now artificial intelligence can do that in what we call an agentic, so like autonomous functionality. So 24/7, 365, never needing a break. Artificial intelligence could be performing all of the tasks that we just went over, whether that's organizing information for you, looking for things that are out of place, or creating analysis or drawing or creating synthesis, and doing that continuously. And this is what we
yes.
call more of like a monitoring function. So if you have, whether it's an active job site or you have new financial information that's being updated throughout the day, to be able to watch that, watch every single data point and say, well, looks like this is out of place. Let's quick notify the director. Let's notify a technician or the financial controller and let them know that something just updated behind the scenes so that they can get to work on that, and rather than stumbling across that months later or in the middle of some sort of negotiation or when you're closing on a deal. You want to be very proactive. That's the key word here. With artificial intelligence, rather than everyone being reactive, we can start to be proactive and see what's changing at any given moment and start to act on that. And that's true at any stage of the property life cycle. We're talking pre-dev, construction, handover, operations, even disposition. All sorts of data is moving, changing. We want to be able to monitor that, draw insight from that, but then also identify things that are moving, and bring in human intelligence then to create a decision. It's really shortening the amount of time that it takes for people to make informed decisions.
Absolutely. Well said, Matthew. We've got some questions coming in here. I'll get to them in a second. I have oftentimes, and I've been using artificial intelligence for 3 years now. And so, it's a skill that I've been working on building is, what do I use it for? How do I use it? And then I think the biggest inference that I've had with it is even though you put the inputs in, then the middle section is the workflow, right? So inputs are as good as you give it, and then it has workflows, and then the outputs need to also be reviewed. So the inputs and outputs still need to be really reviewed with human intelligence, like you mentioned. But man, that workflow of a prime use case is, we wanted to look at all of the industrial outdoor storage properties listed for sale and for lease in Kansas City. So what we did was we pulled all of the reports off of Crexy into spreadsheets, and you had 62 properties, whatever, 50 columns, all these line items. Well, it could take some time to go through each and every one of those. So what we did was we uploaded it to our AI and said, hey, we want to create a market report on what is for sale, what is for lease, and generate some inferences, some trends from this. And the output that we got was absolutely wonderful, right? But we still needed to review that because it was going off of the data that I gave it. Well, if there's wrong data on Crexy, it pulled out, like you mentioned, some anomalies and some outliers for us to review. And that just gets to the question that we got here. I gave my 2 cents here on one practical way that we could begin using AI today without completely feeling overwhelmed. Well, there's one example right there. Matthew, do you have any practical, implications that you would like to share? Any use cases that you found to be valuable in that sense? You gave a lot of good overarching themes before that, but the question is just one practical way that we can start using AI in commercial real estate today.
Well, we're doing this in real estate finance with what we call the operating system for real estate finance that I've been working on. And I'm glad that you brought up the word workflow, because that's sort of the mental image that you'd want in place as we describe what's going on here, where it's step by step, something is being initiated. And each of those steps, the faster that we can do that, the faster we can move to the next step, move to the next stakeholder, the next party. In our case, we're really concerned with repricing the capital stack, which is a very convoluted process. Typically, you have to start with first, what is the latest data and information about the underlying asset?
Yes.
Has that changed this month? What are the dozens of documents that we would need to look over to see what's actually going on at the ground? How do we know where to focus our attention? What's changed and what's not? So first, right there, the monitoring function to say we've got all these disconnected systems, fragmented systems, or silos, which real estate is very familiar with. We need to monitor these all the time. Well, one person doing that would be a headache. But if you can use agentic AI that's looking for any changes and see this document just got updated. Now let's look inside that. What was the change? Was it material? And then pull out that new data that's been produced in that document, or that file. Chances are most of it is the same. It can be one number that changed. We want to get to the bottom of that as quickly as possible.
Absolutely.
Then what's the next step in the workflow? What's the dependency on that number? If this is impacting our profit loss statement, if it's impacting the valuation of the asset, which likely it would if it's also impacting the income of the asset, how do we start to look at the dependencies? And when you mentioned that you took this data from Crexy, you put it into a spreadsheet, and you started comparing things, that's another really great example. Artificial intelligence can quickly compare data. And so in the broader context, that's creating like a knowledge graph. So if one document changes, how does this document compare to other files or financial data or financial software that we have? Let's quickly compare and contrast what the new data is and how that compares to last month's data or data that's sitting in other systems. That'll quickly tell us we're making more money this month, or this number might be an anomaly. Like maybe someone fat fingered an extra zero and it's missing a decimal point. So quickly running that analysis on data flowing in, usually you would need a team of analysts doing that. They would all have to be talking to each other, extracting the data, putting it into the models, looking for any errors in the spreadsheet. Then they hand that to a senior position, and that person's going to look it over because they want to ensure that the job is being done correctly. This is all happening very rapidly. And again, in our example, so you've got the data collection, the data extraction, you start to put that into models, and we have tools that can rapidly place that into the right cell while maintaining a link back to the source document. And then you run a calculation. You start to reprice the assets. And when that calculation is done, we can even go notify a third party and say, professional appraiser, I won't name any, but let's say Big Five appraiser, are you interested in reviewing the mark on the assets? We can quickly notify that. Usually this is a back and forth process in real estate where you move files around, someone else receives it, they check it, they move the data, you send it back and forth. It's very streamlined now. And really you're taking the whole data collection and verification process and shortening it. Things that would take teams months and months to just go through each step of the workflow being shortened, being compressed. And not only that, again, the agentic function, you not only do it faster, you could do it more often.
Yes.
That's the productivity curve in real estate that we haven't experienced before. It's not just doing things faster, it's doing it more often. Not just building one building faster, building more buildings. It's that at scale capability that artificial intelligence really enables.
Absolutely. Well, I couldn't agree more with Axel. He's saying, well said. I agree. Thank you for being here, Axel, and sharing your thoughts. And Anil Kumar just wanted to say hi. So thank you for being here as well. Well, let's move on to have another segment that we wanted to get to, which is tokenization and the future of capital markets. Tokenization has been discussed for years, but where do you think the technology actually stands today? Is it something that investors should be paying attention to now, or are we still kind of in the early innings?
The technology is mature, it exists, it has the regulatory frameworks that make it acceptable to securitize and tokenize real estate, to be able to distribute that and trade that. And most of that has existed for many decades. It just uses traditional securities laws. And maybe we should quickly cover what tokenization is. Ultimately, it's this concept that real estate has a lot of value and data that's constantly moving between parties. Everyone has their own books, and that means that we have to reconcile things sometimes. We slow down, we double check, we fix the errors, and then we move on. A blockchain says, what if we all had one book? What if we had a shared ledger to start recording information and value? It's really that simple. There's some, I don't even want to complicate it. People might ask questions like, how does that work? Or how can I trust that? But for this conversation, it's a shared ledger, which is valuable when you have a lot of moving parts in a big industry and market like real estate. So people got the idea, following finance and what's happening in banking, to start to move different portions of real estate and the real estate capital stack onto a shared ledger where we have information symmetry. We can all get along and we can move faster. What's interesting about this is that the technology is rather mundane once you get over the fact that we have a shared ledger. And the question becomes, how do you actually implement this? What's the ecosystem that has to exist around it for it to be functional? Because you could have someone providing the technology to you. Okay, now what are you going to accomplish with it? If you have information symmetry so that everyone agrees, what are you trying to accomplish with that? Is it because you're trying to create liquidity for your assets? Are you simply trying to move through the transaction faster? And in which case, what other parties have to be involved for this to be complete? For years, people said just tokenize. And out of context, that doesn't make any sense. It's one step. That's like saying, how do I get started in real estate? Just build. Actually, there's a lot more that goes on than just creating a building. Everything from, well, we need permits and licenses and entitlements, and then we need all sorts of different subcontractors to do their particular job. We need someone to oversee that. We start to get a finished product. There's different software involved, and now we have a structure We have to populate that. We have to create revenue from that. And so by saying just tokenize it, it misses the bigger picture, which is that if you're going to have a shared ledger, you need to know who's looking at the shared ledger. And up to this point, we really haven't had many people looking at the shared ledger. For some, it was the banks or a lender or just the owner or maybe some investors. You have to identify that. And it took so long for the industry to figure this out that you needed a use case for the technology rather than just saying that, hey, go tokenize your real estate. And now we're starting to see that. And so again, going back to the operating system for real estate finance example, when we run a workflow, like collecting data about the performance of the asset, structuring that, verifying that, pushing that to models, encouraging a third-party mark on that, a repricing of the capital stack, well, now we have a really good use case for tokenization, because that's a lot of data moving around that people need to make sure is accurate. We're all on the same page. And then what we encourage is, well, maybe all that data could start to change how and when real estate gets priced, which we all know it's a very opaque, illiquid asset class, which is customary of private markets, but there's some downfalls to that, and maybe it's worth fixing. And so when we tie that to a security that's also on this shared ledger, well, now we have inputs, the data about the real estate, and outputs, the price and risk, that we can trust, which traditionally real estate hasn't really had that. We know that repricing assets is a slow process, and valuation is typically very debated. People disagree on that. Now you're starting to see a better method for having efficient and transparent valuation for real estate, which I'm very opportunistic about. It's been long overdue being able to reliably price this asset class and hold it on a balance sheet, and also know that you're not getting the short end of a stick on a deal. That's why alternative investments are usually a small part of a portfolio, because there's all sorts of risk and you know that you might be getting the short end of the stick. Now we're sort of flipping that around, and you have this newfound trust that could exist in the industry and market. And so overall, that's where I see the future of capital markets going, where there is more trading activity, there is possible liquidity and collateralization, but only if it's backed up by this predecessor of really artificial intelligence providing a surplus of data about the assets. You wouldn't trade something that you don't know or don't understand or don't trust.
Absolutely. Well, we got some questions coming in here. I'm going to pull them up on the screen here. Garth Gibson is asking, what's the recommended blockchain to use? So maybe that's a quick answer here, but he's also saying that we would need some kind of deposit and transaction insurance like FDIC for fiat. I'm guessing fiat currency here. Any thoughts on what blockchain to use, or thoughts on some sort of deposit and transaction insurance?
I don't really pick a side when it comes to blockchains. There's many of them. Ultimately, the question is, does it cost a lot? Is it efficient? Is it secure? And most of them check those boxes. At this point, there isn't really one good blockchain. It's just, does this work? Ultimately, there are some people trying to carve out some more nuanced use cases and say, well, this blockchain, because it's just code at the end of the day, is also programmed to do automated compliance, or this one is programmed to store more information. Whatever it might be, people are starting to customize it to create more versatile shared ledgers, but I'm not picky about it. For the second question, if you could pull that up on the screen real quickly.
It's more of a comment, just like, that we would need some kind of deposit and transaction insurance like FDIC.
Generally speaking. And that's what the banks are figuring out, and a lot of it is insured. It's going to vary depending on the financial institution, but people are treating digital currencies or stable coins the same way that they treat fiat currency or dollars. Just because it's now a shared ledger rather than being reconciled between banks doesn't mean that it loses its value or it becomes unregulated.
Yeah, thank you for commenting on that. Axel had a question as well. Matthew, what are your thoughts on, even if assets are tokenized, is there any enhanced liquidity without an established secondary market?
That's a really great conversation. So I was just speaking with folks about this earlier. What is the purpose of tokenization if there is currently not a mature secondary market? And I would say I don't necessarily think there is one. I don't force anyone to go through the process of tokenization. Again, it's one step. Think of it like this. Are you going to go through the trouble of making your building hurricane proof if you're in Kansas? Probably not. And same
Yeah.
thing for your asset. If you don't have all the data infrastructure in place, and if there isn't a secondary market for your type of asset, then should you try to enhance the capital stack? Should you create financial instruments that can be traded? Maybe not. It's not necessary. Tokenization is this idea that, okay, if we all have a shared ledger, if we have shared books about this property's capital stack, we can move it around faster, we could trade it, we could do different things with that. If you're not trying to accomplish that, then tokenization is going to be overkill in
Absolutely.
many capacities. And really, I then start with just the data in artificial intelligence. It's better to start there and to have a digitally informed property, to align your stakeholders, to be accelerating some workflows, to be taking care of your property better, to be more informed about that, ready for sale, or maybe getting a better cost of capital. Great. If tokenization makes sense because the market is timed that way, or you're trying to do new things with your capital stack, then you gravitate towards that. Otherwise, the cost, the time, the headache of creating higher functioning digital instruments, not necessary.
Yeah, makes sense. Well, like I mentioned previously, we've talked a lot about data centers on this show, but digital infrastructure really extends well beyond that. And so, in your mind, what should commercial real estate professionals understand behind kind of the relationship of data centers and fiber and power and AI as this sector continues to grow, right? This is such a new territory for most professionals in this industry. I'm just curious your thoughts on that right now, because it feels like the new world order in regards to having power, having AI, having smart buildings, having the opportunity to understand your books on a regular basis and be able to mark your assets and all of those components. But what do you think commercial real estate professionals need to understand about this relationship right now?
Well, it's interesting. In some ways, with the definition of digital infrastructure on screen, we've expanded into physical infrastructure,
Mm,
the energy, the data centers, what it takes to actually power the digital infrastructure. And I guess there is not a widely accepted definition for this
mm,
just yet. It's growing because for some that could mean a place to store data, to process the data, the artificial intelligence, the use of that in markets, and then people expand into market infrastructure, digital market infrastructure. Like there's a lot of terms that are being thrown out there. I guess starting Look, my read on the market, if we talk about data centers, since this is on the slide in front of us, as digital infrastructure continues to expand, and it only will, it will only get bigger no matter what. Physical infrastructure to reimburse that or support that becomes more critical, whether
yeah.
that's the facilities in which the data is being stored and processed, or the utilities needed to make that possible, which would be electricity and water. So I would say it's a pretty safe bet to continue to develop in these spaces. We really can't develop it fast enough, and not just the data centers, but also the structuring of the grid of our utilities to support that. Like we're getting involved in a massive infrastructure project that is going to hopefully revitalize a part of the grid of the country that has been underserved for many years. And it couldn't be more timely
Mm,
because there's just this absolute demand of the physical infrastructure to support the digital infrastructure, all the stuff that we're talking about, the workflows, the AI, the data storage, the capital markets stuff, all of that requires energy. It's all bytes. moving around, and it needs to be backed up by something.
Yeah.
That being said, on the digital infrastructure side, I also think that that's a pretty decent investment. And the more that we develop artificial intelligence tools or we expand on digital markets, nothing exists in a silo truly. Like there has to be some sort of shared technology that we uh, utilizing consensus in order to move a market forward. If you build your tools and I build mine and she builds hers, and then we don't interact with one another, we haven't really engaged on anything. So I'm sorry, I'm trying to juggle some of these terms here because it's a part of the market that we haven't all really agreed on a shared definition. But
Yeah, no, well said.
does
I
that
think
answer the
that's
question?
I think so,
Okay.
100%. Yeah, absolutely. You know, let's talk about the transparency. I mean, commercial real estate's often been, criticized for lacking transparency, especially compared to other industries or markets. So, we've talked about blockchain and tokenization, but where do you see some of the biggest gaps today in the finance sector, and how do we think that technology is going to help close those in the near term?
Well, transparency has it's a double-edged sword, or at least many people would consider it that way. It could expose the true value of something, the risk,
Mm,
and that could maybe be detrimental to someone who is not ready to reveal the downsides of an asset or an investment. But I think ultimately, we're gravitating towards better transparency in private markets, broadly speaking, not just in real estate, because capital needs to be informed in order to flow. And if you look at public markets, they have standardized disclosure, they have quarterly reports, they have audits, and public companies receive a lot of capital, and it's liquid capital, and companies are able to grow that way. Real estate is a very hesitant, opaque asset class, and it pays a price for that. Projects stall, they don't get funded, there's red tape, there's all sorts of issues there. And so people are starting to say, well, we do need infrastructure, we do need real estate, we want to invest into this, but we have to be protected. So you know what? If anyone can come forward with a project that is more transparent, then we're more willing to invest in that. It's just common sense. Now, the deployment of that is a little bit challenging
mm.
because private markets have a lot of sensitive data. They have private information, personal information. A lot of times the deals are cross border. Well, how do we protect data while also creating trust and enabling transparency so that the capital can flow? And this is an area where I think blockchain is actually pretty cool because it acts as a sort of receipt layer. One thing I didn't
Mm.
mention about blockchain is that it has an immutable attribute, which means you can't go back in time and change something. So if we have certain files that are important to this property, that they were created, they came from a certain system, they influence the value of that. What we can do is we can create a blockchain receipt for that document, for that appraisal, for that lease agreement, for that audit, whatever it might be. And people are able to see the receipt that the file exists, it's been signed off, that it was created at a certain time, and not necessarily have to read the underlying data, which could expose competitive edge, proprietary information, personal information. And it creates this sort of like this environment where you can trust something and prove that it's unmodified or that it was handled by a licensed individual without reading it necessarily. And a good example is what happens in public markets when Apple or Microsoft or Nvidia goes through, they release their earnings, that has to be audited. And yet you didn't read all of their financial statements. You didn't read all of their receipts. You can't see everything that's happening in the supply chain. You know that that's been inspected, that it's undergone scrutiny, and then you can see the end result, the earnings and the financial report behind that without seeing all the work that's gone into it because someone else did that, and you just trust the government enough when they sign off on that. Blockchain enables something very similar where we can say we've got all this private information and we can produce that. We're producing as much as we can. It's been signed off on. And you start to trust the asset more. You trust its capital stack. You're willing to invest into that. And so you have this interesting trade-off with transparency where you still have privacy, but now you have public trust
Mm.
in an asset. And it's a lot to digest initially. This whole concept of believing without seeing, essentially, and how a blockchain offers a receipt for real estate information. But all that to say, because I know immediately when we talk about transparency, real estate's, I'm going to make your real estate more transparent. That people get scared. And I don't blame them. Who am I to say that your asset needs to reveal more information? But ultimately, I think we're moving towards a way where real estate can still protect its privacy and have all the right permissions in place, but assets can be trusted more, which is going to enable, some of these bullet points that we have here: the overall visibility, the faster due diligence, the decision making, the tradability of the asset class, the efficiency. It's going to take time, that's for sure. So the rollout of this, because first you need access to data, you have to structure the data, then you have to create a receipt of the data, and then you have to use that in something where the receipt would actually be useful. If the data just sits in a folder somewhere, why bother creating a receipt?
Right.
If you're using that data because you're going to reprice the asset and you're expecting investors around the world to trade that, yeah, you better have your receipts in order, or they're not going to trade it because they don't trust it.
That's exactly right. And I think it goes well into our next topic, which is, I can envision a world in the next decade that a property, right, has receipts and has verifiable information, has transparency, has a more compressed cap rate when you go to sell. Right? So think about this. On your listing, for example, you're selling a piece of real estate. If you have utilized this technology for the last 3 years, 5 years, whatever the time period is, you're a verified property. And now investors can really see the true operating performance. They can see all of the title issues for the last 5 years. There's receipts, it's verifiable, it's trusted. And that would probably lead to an investor creating more trust, that next buyer, of purchasing this, right? And I think that's where it really gets, I think, interesting for professionals in the space, or maybe a lender that is more willing to lend on the property because they know what the operational expenses have been and what they might be, what the vacancy, the occupancy, the rents have been. If that's verifiable in a way that makes people comfortable, I've found that transparency and creating that trust gets more capital moving. And that's what you've been talking about here, which has really opened my eyes to what maybe the next decade of commercial real estate can look like in regards to practicality. There's a ton of different opportunities for actual operators and folks that own this real estate. I do believe that as well. I'm excited for the next 10 years, right? I'm really excited. It is a lot. It's a lot to take in and try to understand. I foresee some pushback. I foresee some pushback from large trade organizations having to pay major title companies or title insurance fees that you can now get at a click of a button, right? The title company is a big industry, and maybe they just adapt and they become a service vendor for this type of real estate. But I want to hear your kind of take on maybe some pushback that we may get in the industry from some of these larger organizations that are fee-based based off the work that they're doing, that you're saying here could be streamlined in the future, and maybe give us the crystal ball on where you see things going over the next decade.
So intermediaries who are responsible for creating trust between two organizations, at least what we've seen in banking and finance, were initially resistant to something like blockchain technology. Artificial intelligence, we'll get into that, but blockchain, they resisted that because they said, well, how can you really trust this as a ledger? I think you want an independent third party who acts as an intermediary for you and ensures that everyone is on the same page. Real estate goes through a lot of that. You move information, you break the chain of custody, you have someone else double check it, send it back, send it to another person, you go back and forth, and you have all these stamps of approval along the way. Well, what if that wasn't necessary because inter-organizational trust could be inherently built through the technology that we're using? Then when I send you numbers or you send me something back, I can take that at face value. I don't have to scrutinize it or question the integrity. I don't have to go to a third party and say, double check this against your database, and see if this makes sense. I know where the number came from. I know how it's been handled. I know if it's been manipulated at any point. That sort of trust has not existed in real estate. So there definitely is there's some questions asked about who gets removed from that process. Also some questions about whether we can really trust those numbers immediately, or if we still want to involve third parties. I just had a conversation about the appraisal and valuation processes, which was, could AI do it independently, or do we still want a third party appraiser to come in and put a mark on the asset? And I think what becomes the rule of thumb is that in something where quality assurance is totally necessary, you would still bring in an intermediary who helps establish even more trust. But what's going to be required of them is not just that they sign off on something, because AI and blockchain are going to be able to allow us to communicate pretty seamlessly, but that they're adding more value. That's the thing. The intermediaries don't really add a tremendous amount of value. They definitely double check things, but for the amount that they're compensated, I don't think that they're really making that, or generating that much value. And so this is going to force some third parties that get involved in the deal process to then say, all right, in addition to working between parties, we're going to add something to this. We're going to add some proprietary value that makes it worthwhile to continue to engage in us, even if our original function of acting as an intermediary is fairly redundant. At least that's what we've seen in finance and banking. I think it's going to continue in real estate as well. And you mentioned some great points. I just want to reinforce some. The compressed cap rates, the tighter spread, bid and ask between the buyer and the seller, that's going to narrow. The amount of time that it takes to get an asset ready for some particular legal or capital event. So that's all intra-organizational stuff. This is all going to speed up. And then when you go inter-organizational, so companies, firms, people that don't necessarily know each other or work with one another, even that timeline is going to be compressed, because a lot of people know it's not just how quickly I can get my property ready for sale or go to the refinancing. It's how long the other party takes. That's what gets dragged on. They poke holes in your assumptions. They don't like your numbers. They need more documents. All of this is going to be compressed tremendously as a function of compute. So just processing a lot of numbers really quickly, whether that's software or artificial intelligence. And then the trust, the fact that we will start to move files, move numbers and value that the other party can trust. Private markets haven't had that traditionally, because you don't have something like an auditor or the SEC or the Edgar database that, or really FINRA, that is acting as that quarterly authority that comes in and checks things. You just send it to another party. And so now if we can have that same level of trust in a private market enabled by technology, we're going to be able to move capital really quickly. Deals are going to close faster. Portfolios can scale faster and farther than traditionally. It's really exciting. And it's not all finance and capital markets. At the end of the day, there's stuff that's going to happen in construction and design. What's happening there, the operation of the properties, maybe the resiliency and the maintenance of them. It's all across the board that this is happening. I've just chosen to focus on real estate finance today because, in my opinion, the tail wags the dog. And if you can make the money move into real estate, commercial real estate in particular, then the rest has an easier time.
Couldn't agree more. Fascinating topics here. Axel has another question. Axel, we have to move on to our next segment. I think that Matthew did a great job sort of answering that question, but we'll get to that in the comments on LinkedIn as well. We got to get to my favorite section, which is quick takes with Matthew. Matthew made a really good point. We are using artificial intelligence for these slides. That is Matthew 10 years from now, 15 years, 20 years from now. Okay, so that is not a picture of him. So Katie, if you're listening in, I appreciate the slides and the support, but we kind of pulled Matthew in from a next decade or two in to where he's at. But anyways, okay, I'm going to get to a couple of these because I think it's really important. One technology, in your opinion, that every commercial real estate professional should learn. I get the question quite a bit. Hey, I'd like to get into commercial real estate, whether that be finance or brokerage or development. They said, what do I need to learn? And I have a brand new hire here who went through a real estate program. I said, well, what they teach you there, right? He said, well, they taught us how to prompt AI. So, okay, well, that's interesting. I mean, I think that's a good skill to have and how to understand that. But from a technology standpoint, what do you think that people that want to work in this industry, in the finance, the real estate world, what should they be learning right now? Like, what's the most valuable technology they need to be learning?
Well, I would agree that artificial intelligence is super important, but it's a lot more than just language models. Language models we're comfortable with them because we're humans and it talks back to us, and that's magnificent. Nothing's been able to do that really up to this point, but AI goes deeper than that. I really
Yes.
think that looking at the broad use cases of artificial intelligence, like the behind the scenes monitoring of what's going on in my systems, how do we flag things that are out of place? How do I be proactive about maintaining certain components in the property? Like people are starting to use IoT and AI to notice, looks like this component, whatever that is in the property, it could be anything mechanical, electrical, is failing. Let's start to fix that. And then on top of that, you could have a language model where initially AI detected an issue, and then it turns that into human speak where it says, hey, Logan, 7th floor, we've got an issue. Can you get on site? Can you check this out? That's going to be incredible.
Absolutely. Always love to ask people their favorite book or podcast that they're reading or listening to right now.
Oh, wowee. I've been bouncing between podcasts. As far as books, I really like the Robert Greene stuff. I think it's really important to understand other people. For podcasts,
Yeah.
It's a mix of like Jocko and Alex Hormozy,
Yeah.
how to take over the world, becoming the main character. My own podcast, Code and Concrete, if anyone's interested.
We gotta definitely shout out to that as well. You've named a few of my favorites. I have Jocko's official leadership workbook right here. I have Alex Hormozy's books right here myself. So love listening to those or reading those books on a regular basis and watching those guys' videos. Lots of good stuff out there right now. We've kind of getting to some predictions, generally speaking, but put your thumb on one. What's one big prediction by 2030 that commercial real estate is going to be doing this that they're not doing currently?
You're going to see more singularity. It won't be accomplished, but you're going to see this overlap, and hopefully it'll be harmoniously between building systems, building software and finance, IoT, AI, the people who are working in those buildings as well as managing them. There's going to be this sort of singularity or this orchestration, and it's going to make good music that doesn't exist in real estate right now. It's a lot of silos. And you're on top of that, you might even see more personification of buildings. I think they're going to take on personalities, and this is inevitable with AI, because if we use human speak to start describing property maintenance or property finance, inherently or maybe naturally, we will personify that, and people will probably program personalities or bias into their buildings. If it's an academic building, they'd want it to sound sophisticated. If it's self-storage, it'll be boring. If it's one of those cool millennial walkable hubs, mixed use, maybe it's going to be a little hip in the way that it talks to you. It's going to happen. And it sounds weird at first, but I'd say don't be too afraid of that. The built environment is just extensions of us as people. We build it, we live, work, and play in it. So maybe it'll talk back to us like a person too.
Wow. Yeah, I hadn't thought about that. The personification of a building. That's wonderful. Matthew, thank you so much for sharing your insights with us today. For everyone watching, listening to this, where's the best way to follow your work, learn more about what you offer to the marketplace, and how can they get in touch?
LinkedIn is probably the easiest. I'm very active on there, either posting new research and insights or thought leadership, trying to get a conversation going. So Matthew A. Schneider on LinkedIn, that's a good place to follow me, connect with me as well, send me a message. From there, we can figure out the details, whether that's a call, something on an email if you need more resources from us. Traditionally, our website is a good spot. We're doing work on it right now, and so it's just not available to folks. But I can always send that later. So LinkedIn, that is certainly the best place. And again, I'm going to plug our podcast, Code and Concrete. That's where I don't ramble. I just sit back and let someone else do the talking for a little while. It's available on YouTube, Spotify, all the usual spots. We just talk about built environment technology, as well as other things like robotics or sustainability. It's a really great show.
Wonderful. You've been a plethora of great information, got my mind really thinking about the future. Gets me excited talking with folks like yourself, and you are clearly very knowledgeable and do this on a regular basis. So thank you for sharing those insights with us. And if anybody listening is interested in Kansas City commercial real estate, you can always find us at www.mwcreadvisors.com. It's been another episode of the Kansas City Commercial Real Estate Market Pulse with Matthew Schneider. Thank you all for tuning in. Thanks for all the wonderful questions. If we didn't get to one, we'll follow up in the LinkedIn comments and make sure that we get that answer. Matthew, thank you again.
Thank you, Logan.